In this video, we are going to wrap up our discussion on the tax side of the federal budget. This one's probably going to be, well, I was about to say this one's probably going to be a shorter video, but saying that probably means it's going to be very long. All right, but what we're going to be looking at in this video are the two other major sources of tax revenue for the U.S., so Social Security and Medicare taxes, as well as corporate income tax. And we're going to fly through these pretty quick. I'll go ahead and tell you there's not a whole lot to say, or at least there's not a whole lot I want to say about these. All right, and then we'll talk briefly about different types of tax systems. All right, but without any further ado, let's go ahead and look at our Social Security and Medicare taxes. All right, so these make up 35% of tax revenue, right? And they fall under the Federal Insurance Contributions Act tax. All right, also known as Fica Tax. All right, so whenever you've looked at your pay stub or whatever it is, right, however you get kind of information about your income, right, you're going to see one, just kind of income taxes, then you're also going to see these FICA taxes. This is your Social Security and Medicare taxes. All right, or really this is your Social Security tax. So the FICA tax takes 6.2%, right, on the first $132,900 that you earn, right? Also, this is as of 2019. I don't know if it's gone up, but as of 2019, right, that was the amount. It's usually always 6.2%, right? But sometimes that income rate goes up. All right, so you pay that. So you pay that 6.2%, and then your employer also pays 6.2%. All right, so let's really don't have a whole lot more to say about this. But just a couple of things. All right, so that's 6.2% on your first $132,900. All right, so that does mean after you get past that amount, you're not paying any more Social Security taxes. All right, so once you've paid 6.2%, right, once you've earned that first $132,900, right, you're no longer paying those taxes on the remainder of your income. All right. Also, just a note on the employer also pays 6.2%. That's kind of misleading because your employer does like physically pay that amount. All right. They are the ones that get. I don't really know how that works. I've never been an employer, but they are the ones that get money taken. Their money is taken to pay for those 6.2%. However, in reality, they're really not paying for it, right? You are still paying for it, right? And what I mean by that is if the employer didn't have to pay this 6.2% on your income earned, you would probably be earning a higher income, all right? So the employer is going to compensate for having to pay that 6.2%. So in the end, you are, in effect, paying it as well, right? All right, but that's it. We're all probably somewhat familiar with Social Security. All right, then for Medicare, both the employer and the employee are going to pay 1.45% all right, in Medicare taxes, all right? And these do not have a limit on them. So you're just, however much you make, that's how much you're going to be paying 1.45% on all of it. All right, and again, you know, even though your employer technically is paying, all right, that 1.45% for you, all right, that second 1.45%, same kind of thing applies. If they weren't forced to by the government, they would probably, we would probably see higher wages. All right, so on the tax side, there's really not a whole lot to say about Social Security and Medicare. When we get to the spending side, we're going to talk a little bit more. But we'll just quickly look at the last one, the corporate income tax. This is, it kind of says it in the name, it's kind of like the individual income tax, but for corporations. All right, so if you've got a business, you have to pay taxes on it. That is your corporate income tax, right? And that is at 21%, right? Again, as of 2019. But of course, just like with the individual income tax, right, there are ways for corporations to reduce that tax rate, all right, through a variety of things that I don't necessarily know about. But all right, whether you're talking about tax loopholes or charitable giving, so kind of the same thing as our deductions and tax credits for green initiatives, so on and so forth, all right, they can lower that tax rate. All right, but that is it for those other two major sources of tax revenue, all right? So I told you we're going to fly through this pretty quick. Again, really the big one for most of us, kind of trying to, the thing that kind of is helpful for more of us to kind of understand is that tax system, that individual income tax. Medicare and Social Security doesn't really help you to know those tax rates, and those are going to be there for until they aren't. So they're not going to really change that much. All right, and then also corporate income tax for most of us, that is never going to really come into play. All right, but that being said, let's move on to the last thing, which is a look at different types of tax systems. All right, so the first type we're going to talk about is what's known as a progressive tax. A progressive tax is one in which or a tax that has a higher tax rate the higher one's income. All right, so for a progressive tax, as your income rises, the tax rate that you are being charged is going to be higher. All right, kind of a classic example of this is the individual income tax. All right, our individual income tax, as we moved up through those brackets, right, to higher and higher levels of income, right, not only did the marginal, well, one, the marginal rate changed, right, so the marginal rate went up as the income went up, right, but also for most people, kind of all things equal, right, the higher your income, the higher average tax rate as well. All right, so progressive taxes are pretty common. All right, the next type, all right, the next system is a flat tax. So the flat tax is a tax that has a constant tax rate. All right, so it does not matter how much money you make, right? Your tax rate is going to be the same, right? Now that doesn't mean that you're going to be paying the same amount in taxes, just that your tax rate is the same. So the higher your income, you are going to be paying more in taxes, but the tax rate you are paying is the same, right? An example of this would be Medicare tax. It doesn't matter how much money you earn, you pay 1.45% on all of it. All right, so it doesn't matter. Yeah, well, man, I've already said that. It doesn't matter how much you earn, right? You could be making millions, or you can be making, $20,000 a year. All right, it doesn't matter. Right, that tax rate is the same for everyone. All right, several states have also started using flat taxes for the state income tax. Just a couple of them: Colorado, Illinois, Indiana, Massachusetts, and Tennessee all use a flat tax for their state income tax. All right, there has been a push, or at least, I guess it's been 8 years now. There was a big push. It might have been longer than that. Anyways, right, around a decade ago, there was a big push, right, during one of the presidential elections for a flat tax for a federal income tax, to make the federal income tax a flat tax. Kind of notably, Ron Paul was a big proponent of that. All right, but of course he didn't win, so that did not come to fruition. One reason people are advocate flat taxes is they say it's simpler, especially considering the kind of tax system in the U.S. Right? It's very complicated. The argument is that if we have a flat tax, then we can just get rid of all loopholes, we can get rid of all deductions, credits, all those kinds of things, just make it one tax, right? You might have also seen bumper stickers that say fair tax, and they're talking about the flat tax as well. They argue that it's a fairer way to tax people, right? All of those arguments are most of those are kind of normative, that they're not really they're opinion based, right? But those are some of the arguments for a flat tax. All right. Then finally, the last type of tax system that we're going to talk about is what's known as a regressive tax. So a regressive tax, we might be able to figure this out just based on the direction we've been going, right? But it's a tax that has a higher rate the lower one's income is. All right, so the less money you make, the higher your tax rate. All right, so these can be a little bit hard to kind of think about, right? Why would you want to tax the people with the lower amounts of income a higher rate? It's a little bit counterintuitive, right? However, all right, we do, all right, at least arguably, all right, it's not conclusively one way or the other, but many people believe we have a regressive tax in the U.S., right? And that tax is sales tax. All right, so some will argue that because sales tax is kind of just, well, we know how sales tax works, right? You're going to pay it on kind of everyday items, right? Well, if you take two individuals, you take one with a very high income and a very low income, right? And you consider how much of their income is being spent on goods that's going to be kind of getting the sales tax put on it, right? And the argument here is that if the lower your income, the higher portion of your budget is going to be going towards those things, right? Buying groceries, food, right? Really just anything that you would need, right? Probably, you know, a lot of people don't have money just tucked away, right? When they get money, they are spending it, right? And they are going to be getting that sales tax on most, if not all, of those purchases, right? Whereas if you have a very high income, right, you might not spend all of that money, right? You might be putting it away doing different things, right? Doing things that you're not kind of getting that sales tax for. So because at lower incomes, you are using a higher proportion of your income to buy goods and services that get this sales tax, right? Your actual rate, right? Not just because the actual rate or the sticker rate, the one that we're told, right, is, you know, that's constant for everybody. But as a portion of your income, right, it is a regressive tax, right? You're spending a higher portion of your income, right? So a higher portion of your income is getting taxed at that rate, right? And so overall, you have a higher tax rate. All right, but that is it for the kind of tax side of this, right? So again, just to slightly recap, our three major sources of tax revenue. We've got our individual income tax, we've got our Social Security and Medicare taxes. We've also got our corporate income tax. Right? We looked at all three of those, although really we mostly looked at the individual income tax, looked at how we would find things like the average tax rate, the marginal tax rate, your tax payment, your tax burden, so on and so forth, right? And then finally, we looked at these different types of tax systems, right? So that's it for the tax side of things, right? In the next video, I don't know why I did that. In the next set of videos, all right, or in the next video, we're going to start looking at the spending side of the federal budget. All right, but that's it for this video, and I will see you in the next one.